Hey guys, welcome back to the channel. In this video, we're going to have an educational one and talk about the MACD indicator, which stands for the moving average, convergence, and divergence. Okay, so this is one of the indicators that we set up in one of our previous videos. I showed you how to set up your key indicators, which is popping up in the right-hand corner of your screen. Go ahead and take a look at that if you have a second. And this is one that I use pretty often, specifically for swing trading on when to buy, when to sell, or even for a longer term if I want to try to get a good deal, along with the RSI indicator, which we talked about in our last video, talking about these key indicators. So again, I made one that talks about how to set them up, and I'm going to break each of them down. These are basically remakes of some of my first videos that I had on the channel about a year ago. This is what is the moving average, convergence, and divergence. Moving average, convergence, divergence, also referred to as MACD, is a trend following momentum indicator that follows a relationship between two moving averages of a security's price. The MACD is calculated by subtracting 26 minus the period of exponential moving average, EMA, from the 12-period EMA. So before you get too confused or worried, you don't have to calculate anything. I'm going to show you how to read these things and take advantage of them. So basically, like it said, it's a momentum indicator. It's telling me, are we changing from a bullish pattern, which means we're going up, to a bearish pattern and going down, or vice versa. We've been selling off, or we're about to change from a bearish pattern to a bullish pattern on that particular time period. So we're going to go over that, how to identify that, and kind of go from there. So let's go ahead and take a look at the charts, and let's see how we can identify these things to help you make some trades. Okay guys, so we are on Zion Oil and Gas, ticker symbol ZNOGN. This is kind of a good example of how to use these indicators. So you're going to look down here. This is your MACD indicator. Okay, that's lighting up here. Again, we already talked about the RSI, which shows undervalued, overvalued. If you haven't seen that video, I highly recommend that you go take a look at that, because that's one of the indicators that you can use as well to determine when's a good time to get in or get out. So basically, in a nutshell, again, this is a momentum indicator. As you see, they have red bars, green bars. Whenever we're in green bars, it shows that we are in a bullish pattern, which means we're pushing up and moving up in price, and vice versa. When we get to red, it means we're going down, similar to these candlesticks that we see here. Main difference here is we're looking at, you see these two lines that are running alongside each other, and then what happens is, once they cross each other, once the yellow and the blue line cross at a certain point, typically what happens is you change trend, right? So as you see here, we were in a bearish pattern starting from here. See those two lines crossed here, and then all of a sudden the price started pushing down. All right, and then when you see bright red or bright green, that means you have more momentum in that particular trend. When you see the smaller candles and the darker candles come up, it shows that we're about to reverse and go back to another trend. So as you see here, we had bright red candles, bright red bars, and then all of a sudden they start getting smaller and darker. And what happens is the line starts coming closer together, these two lines, and shows that I'm about to reverse trend. And basically, the closer these lines get together, the more likely it is that you're going to see a buy signal on one of these candlesticks. And when you see that, then typically what's going to happen is the volume is going to pick up. These lines will cross over. So if you bought here, right when the lines are crossing over, then typically you're going to see an upward change of momentum in the price. And then as you see here, the price went ahead and crossed back over, and here it comes with a sell signal. So you're going to see a temporary downtrend until eventually you cross back over and come back up. So just because you get a buy signal somewhere doesn't necessarily mean that price is going to go up. And just like if you get a sell signal, it doesn't mean it's going to fully come down. So you want to use these two indicators to help determine when's a good time to get in or get out. So for example, if I would have gotten in here on ZNOG, as you see, we have a red candle. However, we crossed over from bearish to bullish, and then all of a sudden we got a buy signal. So if you'd have bought in here or even here at the 13-cent mark, as you see, we rode up to as high as 18 cents. But now what's happening is we're losing momentum. The volume's going down. You see that our bright green candles are coming to dark green, and now we have a red Doge candle, which usually signals we're going to have a reversal and a little move to the downside. But you're not sure of that yet because these lines are still far apart from each other. So the closer they get together, typically the price will start coming down and you'll see the price move down. And then again, we're going to reverse eventually and the price will come back up. So that's the MACD indicator, guys. Just wanted to show you that. And it's different on each time period you go to, just like the RSI. As you see, it'll look a little bit different right here as opposed to the 4 hour. Okay. As you see, over the past hour, we've been in a bearish pattern, but that means, it could reverse trend, and then the last hour of the day we could push higher and maybe finish like at 18 cents or so. You just never know. So anyway, guys, wanted to provide that for you. Let me know your comments below. Other than that, we'll catch you in the next one.